Hello, everybody. Adam Parks here with another episode of Receivables Roundtable. Today, I am here with Janneen Jackson with Phillips Cohen Associates, who's here to talk to us about debt settlement. Now, we had done a session on debt settlement a couple of months ago together, and I was so intrigued not only with the topic, but her knowledge of that topic and her perspective on how creditors and debt settlement organizations can be working together that I wanted to bring her back again so that we could talk a little bit about debunking some of the myths that come along with debt settlement. And so I thought you were the perfect guest. So Janneen, welcome back again. Thank you so much for joining us.
I appreciate being here. Thank you very much.
For anybody watching, if you did not see that last episode, we'll link that in the description below. But for anyone who hasn't seen that yet, Janneen, can you tell everybody a little bit about yourself and how you got to the seat that you're in today?
Sure. I started in debt settlement around 2008, and I worked for one of the largest servicing companies of debt settlement. And probably about a year after starting with that company, I moved over to AmeriCorps, which is one of the fifth largest debt settlement companies nationwide currently. Mm-hmm. And I've been in the industry in the debt settlement side, or I was in the industry for 15 years before coming over to Phillips Cohen and making that transition to the other side.
And the transition to the other side, I definitely understand. Well, I've enjoyed working with Phillips Cohen Associates for the majority of my career. Could you tell everybody who might not be familiar what it is that you guys do at Phillips Cohen Associates?
Sure. We're a full service collection company. I actually came over to help launch a specific product called Settle Now. And what Settle Now is a centralized platform that creditors can use which literally integrates with over 100 debt settlement companies and automates the entire debt settlement process, the negotiation of the settlements. The settlement letters are available to the debt settlement companies within 15 minutes of accepting their offer. And payments are also run through the centralized platform. So everything is automated, makes life very simple.
Well, a technology stack specifically designed to manage debt settlement sounds like it would be an intriguing and useful tool across the receivables management industry, especially considering the state of our future economy here, and just understanding that influx of accounts that are coming and looking at more ways to more deeply penetrate each portfolio that we're working. So with all that being said, and I know last time we started talking a little bit about debt settlement, from a high level, let's debunk a couple of myths today about debt settlement and help our audience, which is mostly going to be in the creditor debt buyer agency space, what it is that they should understand about the debt settlement industry. So let's start with just the basics. Like, what is debt settlement?
Okay. Well, debt settlement is an industry that came about because customers and consumers are having a hard time managing their debts. They're looking for ways to, make ends meet on a monthly basis, and they're looking for help. So they're going through some sort of financial hardship, and they come to a debt settlement company to be their advocates, to try and settle out their debt, their total debt, for less than full balance, and pretty much avoid bankruptcy whenever possible. It's just an alternative to other methods. A good one because also some of these consumers can't afford a consolidation loan, so it's just another option.
Okay. So can a consumer enroll performing accounts, or is it all non-performing, like in collections or post-charge-off? Like at what points in the account life cycle?
That's a great question. Really, it depends on the consumer. Some of them have been struggling and are currently current, but they're finding it really hard to stay on top of their monthly obligations. Mm-hmm. So in the debt settlement industry, as a client is just on that teetering edge of falling off the cliff is usually when they start to come in. It's probably the time when they look to debt settlement to kind of help them out of that fix that they're in.
Okay, so if they were to place a performing account in debt settlement, is that account still active, or they kind of that account gets closed out, settled out, and is no longer, like if it started off as a revolving line, I'm assuming that credit would still be extended once they've settled?
Yeah, well, as soon as they start going late with the creditor, the creditor typically does close out the account.
Okay, understood. So, from a debt settlement standpoint, how does a debt settlement organization actually earn its fees from the consumers?
Another great question. So, debt settlement was recently regulated, and well, I say recently, 2010, and it really changed the landscape of how debt settlement companies can take fees.
Mhm.
So, there are three requirements for taking fees. One is that a something has to change with the current situation. So, an offer has to be presented. The client has to approve the individual offer, and then a first payment has to be made to the creditor before a debt settlement company can take their fees.
Okay, and like, how are the fees structured as a percentage? Are they is it a flat fee? Like, how are the fees structured?
Yeah, so when a consumer first enrolls into the program, they look at the total debt that they're enrolling, and
Mhm.
as each debt settles, it is a percentage of the total debt, but for that one debt that settles at that one time.
Okay. All right. So it's kind of working on that percentage basis.
Right.
For a consumer that's looking to enroll in this, or for a creditor or a debt buyer that is lending into particular verticals, are there certain types of products, like credit products, that fit better into debt settlement? Credit card, auto, retail, student loans, fintech. I mean,
Yeah. Yeah,
we could
it's
name a
mostly
whole host of
all
verticals.
Yeah, there is, but it's all unsecured debt.
Okay.
So take all those verticals, and if it's unsecured, that can be put into the program. Medical debt. There are some limits. There are minimums. Some companies won't take anything below 250 dollars. But in general, if it's unsecured, even if it's an auto deficiency and it's already been repossessed and there's still a deficiency balance, those can
Mhm.
be entered into the program. But in general, it's usually unsecured line of credits, personal loans, credit card debt, and so on.
Okay, so it does sound like there's a whole lot of different products that can ultimately be baked into it. When the consumer is enrolling in the debt settlement program, are there other services or products that are available to the consumers through those organizations, or is it this one? Hey, we're going to settle your debt. Here's our track.
Yeah, so that's really changed over the decade or so. It used to be straight debt settlement, but there are other products now that can be offered to the consumer.
Okay.
A lot of them are like litigation defense products, where in case they're sued, they'll have an attorney available to respond to any summons that a client receives. Some debt settlement companies now also offer a behavioral loan at a
Mhm.
certain point of time. So they can do a consolidation loan based off of their behavior of how they've been acting in the program, so that they can, these people that could never qualify for a loan using FICO scores can now get a loan later on in the program to literally get out of debt and for a lesser amount.
So they could potentially be given the opportunity to borrow based on their behavior. So looking
Mhm.
past the standard banking risk matrix that's used in underwriting and trying to understand, based on their specific behavioral patterns. I'm assuming that the interest rates are in line with the risk level of the lender, but the
Well, it's
availability of
all state
credit.
regulated on that.
Oh, I'm sure, but the availability of credit is one of those things that becomes highly debated, right? You have states that really don't want any kind of payday lending to happen, but then you also have consumers in those states who are completely and financially unavailable for borrowing. They just don't have alternatives, so they end up turning to pawn shops and other things. So I find that to be an interesting. Um, it's an interesting kind of outlook on it. So enabling a
Yeah,
consumer through positive and consistent behavior to become a borrower again, and using that behavior as a measurement of risk versus just the standardized scores, which I think is a much more
right.
specialized way to look at that type of loan.
Yeah,
That's very interesting. So, in all the conversations that I've had about debt settlement, everything has been about why the debt buyers and creditors should want to work with the debt settlement companies. companies. I'm curious about how it looks from the other side of the world, right? What are the challenges that the debt settlement organizations have in dealing with creditors or debt buyers or agencies
Well,
or
that
law firms?
yeah, just like debt settlement, there's a large range of companies from the largest technologically advanced ones all the way down to your corner shop mom and pa. The
Mhm.
same thing happens when you're dealing with creditors, whether it be a large bank with a lot of technology resources, all the way down to a servicer or debt buyer that are, less likely to have the technical capabilities in order to work with debt settlement companies. So we used to find that they just weren't equipped. And if they were equipped with the big bangs, it would take a long time to kind of get to a priority level where they could divert some of their resources to engage with debt settlement.
Mhm.
So, having to call in and, the 2 hour holds weren't uncommon back in the day. So it was pretty tough, very tough. And then there was a lot of, just bad press from before debt settlement was regulated in 2010. There was
Mhm.
a lot of bad residual thought process on what debt settlement is. And that was also something that we have to overcome. And we're trying to do that by education, not just of the creditors and, um, you know, debt buyers and such, but also with the consumers too. We do a lot to educate consumers of what the pros and the cons are of getting into debt settlement.
Well, that's interesting. And I think any industry prior to its regulation, a handful of bad actors cause bad press for
Yeah.
everybody. It's definitely something I'm familiar with. I find that to be interesting, though, right? That it's those challenges and where you guys started from making those phone calls, the wait times trying to get on with somebody at the bank, because I do know how long it can take to get the resources necessary to build a direct and secure connection back and forth to whether it be large banks, agencies, law firms, because every organization out there has limited technical capacity, right? And that
Right.
technical capacity gets pulled in a lot of different directions at the same time. And especially when you're dealing with a bank and the level of red tape that it takes to go through, I'm sure it can take years to build out a direct connection to an organization that doesn't already have some sort of an API railroad track running in and out of the systems.
Yeah.
That's a very interesting challenge from a regulatory standpoint. I know you were talking about regulations that were enhanced in 2010. What organizations are kind of
Yeah.
observing and watching and regulating the debt settlement space?
Well, debt settlement is regulated by the FTC under the TSR rule. We also had oversight from the attorney generals for each state, CFPB, as most people are. And then we have our own industry watchdogs. We have our own associations, the AFCC, and recently the CDRI. And those are associations that also the consumers can reach out to. And then you have the BBB and all the other kind of agencies. So we're under the microscope quite a bit, or debt settlement is under the microscope quite a bit. So um, because it's such a popular industry right now, everyone's doing as much as they can to make sure that consumers are treated right, that it's transparent. A lot of money is being pumped into technology to make sure that consumers are well aware of everything they're getting into.
Well, it sounds like it's a little bit of a cross between customer service and debt collection, right? And you have to have these uncomfortable conversations, but at the same time you're trying to provide a service and to improve the experience for the end user consumer, which I find to be
Yep.
interesting as we all, the debt collector, the debt settlement group seem to have aligned goals in terms of satisfying an outstanding debt and providing a good customer experience. So hopefully we'll start to see more collaboration and cooperation. And it sounds like technology, like what you guys have built out over there, has really put you in a position to simplify that process, and to maybe shorten the timelines that would be required for a creditor or a debt buyer to build the rails. Because I'm assuming
Right.
now with your debt settlement, platform, you've got these API technology rails that the banks can plug into in far less time than having to build out the rails themselves.
Right. And also, they don't have to deal with all the different debt settlement companies. It's a centralized platform, it's a one location, a hub. Everything's automated. They just plug in and basically play, and it's run off of the business requirement of that particular creditor. And everything's verified through the engine, so it can make sure that it all is compliant, follows the rules, and does it in a fast way.
Well, that is absolutely fantastic. Janneen, I really appreciate you coming on and having another chat with me. I feel like we're going to have to continue to do this little ongoing segment about debt
Sure.
settlement, especially as more things start to change. And, with all the expected changes in our economy, I have a feeling that
Yeah.
this is going to be a conversation that will continue its importance over time. For those of you that are watching, if you have additional questions that you'd like to ask Janneen or myself, you can leave those in the comments below. If you have additional topics that you'd like to see us cover, you can leave those in the comments as well. And I bet I can get Janneen to come back at least one more time to help me continue creating great content for a great industry. But Janneen, thank you so much for coming on and joining me today. I really appreciate your time.
I appreciate it. Thank you very much.
Absolutely. Thank you, everybody, for watching today, and we'll see you again soon.